Looking good. We got MKP. What's up, man? We got Claude with us. Good morning. Good morning. Let me. No. Looking good. Don't want to do the. Make sure that's muted. There's Jack. What's up, Jack?
What is going on?
Oh, I was watching Tesla today. Was selling off. I was thinking of you. I was like, man, Jack's just gonna be buying some more shares.
Yeah, I think I'm going to get some more TSLL. That's going to be one of my bigger positions now.
Oh yeah. Yeah, I was observing it. I was like, man, I know somebody who's loving this.
I am loving it.
I
I'm
was
loving yeah, I did something I haven't done in a long time. I sold a bunch of puts on stuff that I want in my dividend portfolio.
oh nice. There you go.
AB, MO, J&J, Coke, LRCX.
There you go.
Yeah.
About any Pepsi? You like Pepsi?
No, just Coke. You know,
Okay.
I don't, if I got one retailer like Target, then I don't want Walmart. It's just
Oh yeah. I know what you mean. Don't
yeah.
want to double up. Like if you do
Chevron,
Walmart, maybe don't do Costco or something.
yeah, Chevron or Exxon, I'll take Exxon.
Okay. All right.
Coke or Pepsi, I'll take Coke.
Okay. I like it.
Yeah.
We got Jeffrey with us now. What is going on, Jeffrey?
Professor
Yeah,
called
the
the
professor.
AMD sell-off. Gregory Blitz
Mm-hmm.
is telling everybody.
It's almost to the target too.
Professor Doctor.
I get lucky occasionally. I don't know.
Hey, you're
When at
good.
Called
what
it.
point does it turn from to luck into skill, I wonder.
It's
skill
skill. He
skill at the
calls it
point when I
luck.
can retire.
Oh, okay. All right.
He calls it luck, but it's skill right now.
So I was gonna say. That's
Yeah.
a nice
Skill
call.
skill when I make money off of it.
Hmm.
But funniest thing, if I don't have skin in the game, I get it right. More like
Ah,
almost 100%. If I have a trade on it,
just keep preaching.
it
Preach,
can it can
Jeffrey.
go either
Preach.
way. It can go either way.
Preach it.
Yeah.
Happens to me too. I can look and I'm like, yeah, that's gonna go down. But the minute I put my money on the line, I'm like, damn it.
What can I say? It's like me and meta. Like as long as I don't play meta,
Hmm.
I get it right. As soon as I put $1 at risk, that mofo goes the other way. Uh,
Yeah. I've had same thing. I just don't even need to make a list anymore. I know stocks I can't trade. Lilly, LLY, can't get a handle on it. Um, Meta, same thing. Cannot get a handle on it. So I bail on them.
yeah, I don't know.
Yeah,
Just-
that's how it
I
is
just I don't
sometimes.
know. It's just the way it is.
Well, I'll give you. You got permission there to share, Jeffrey, if you want to do your
Yeah, do the disclaimer
disclosure there. Yeah,
before we
take
get too
that
far
off.
down into anything here.
Mm-hmm. And if you guys will excuse me, I'll let you guys take it from here. I gotta wrap up Chris back here, so I'm gonna let you guys rock it out. I'll be in the chat though, chatting
All
with
right.
you guys. So
All right, so hey everybody, welcome to Market Masters. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. That means I say things, Jack says things. We kind of make some forward-looking statements about the market and may or may not come true. Um, I don't have a crystal ball. I got a bag of unicorn dust. We were kind of joking about. I got AMD right on the money, pretty much, but it doesn't always happen. So this presentation is intended to be informational, educational, fun, entertaining. Hopefully you're entertained, but it's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any financial instrument, you might, and statistics say you probably will lose money. So be careful out there. If you want somebody to tell you what to do, there's people you can hire, but Jack and I, strong proponents of just learning to do this stuff yourself. We have shown that you can consistently make money if you practice some of the things we preach. That is very evident in the new all-time high on my K-info chart right here.
There you go.
New all-time high. Look at this year to date. And the
Very
1 year,
well.
look at this. Look at this.
Very well done, sir.
Almost $63,000. And when we started this show, we were right back down in here. I was barely $9,000, busted through 10, and now here we are, $60,000. Over $60,000 profit.
Very
This is
well.
not easy. It is not easy to do this and be this consistent with no giant pullbacks. I did have a little loss in here. Little, $4,000 is not little really, but I made it right back in a week. Relative to the curve, it is a little loss.
You know, you might want to reframe that loss as kind of outside the box of what you normally do. That was a buy side trade, right?
Yeah, I try to play something a little like I do this beer money trade, and what I call a beer money trade. It's a small amount of money I pick up every day for the risk. It makes about 1% a day. It's usually good for a couple hours in the market. I tried to play something a little more aggressive and cap it off on the high side and make a little more scratch that day, make a little more than 1%. And Trump came out, tweeted that everything was cool with Europe and the stock market took off, and I ended up with a $4,000 loss instead of like an extra $1,000 cheese. And it just, it's like touching the hot stove. I learned not to do that. Just stick to what I do. Stick to how I make the consistent money. So that you always start doing something new at exactly the wrong time.
Mm-hmm.
I mean, I've learned that lesson over and over and over in the market. A guru told me that years and years ago when I was just getting started in this game. He was like, you're always going to choose to start doing something new with your trading at exactly the wrong moment. And that's proved true over and over. And that was another example of that not working out. And you'll hear some people in this game, in this guru game, talk about how the worst thing for people is to start doing some sort of crazy trade and like an idiot savant, you have good luck and you make profit on that trade right away. And it's not a good trade and it's not statistically like something you should be doing, but you make good money and you decide to scale up a little bit. And then the reality of that trade comes in and you take giant losses. And that could be like one of the most detrimental things for traders, I think, is,
Absolutely. You got
is
to know why
to,
you're good.
yeah. So, just having some blind luck could be, it can be a detrimental thing. So if that had worked out for me, it may have been a bad thing, but because the market, I pay for all my education in the market and that I paid for it, $4,000 right there, right there in January 20th and, or 21st. And, so it happens to all of us. And, for me, when I say it wasn't a very big loss, in the grand scheme of I was sitting on like $60,000 profit, losing 4,000 wasn't that big a deal. I made it back in a week and I knew I could make it back in a week. So I was risking a relatively small amount of money for what I've been doing. And just booking
And
a small gain every day is what the game is here.
yeah, we got to remind the good people that you were not revenge trading, not trying to get it all back aggressively or recklessly, like a lot of people feel they got to make up that loss immediately. And you just stuck to the system, right?
Yeah,
You
I mean,
didn't go crazy.
you can see the last 3 months, here's every day just kind of coming up just a little bit. Weekends are flat, but coming up. Then I hit a nice little win on Dollar Tree and then didn't go back after it, just kept on chugging, doing the same thing every day. And then did something new, took a step back, and then just go back to what I was doing. Small, consistent gains. I'm almost back up to, I've almost even made up the curve there.
Mm-hmm.
Even with the hiccup, I'm almost back up to the higher trend line I was. So it's important. You just keep on going, trying to make. It's a huge. Another guru, a friend of mine that actually got me into the guru game, Rob Booker. When I met him, one of the things he said I hadn't really thought about before was just make $1. Like he's like, if you're not successful at trading, if you look at your trading, you're like, man, I'm not good at this. Like I've just been losing. I mean, we're the first month into the year already. If you didn't stop and look at your trading at the end of last year and evaluate where you were and decide to make changes for this year, well, maybe you should stop and look at it right now. If you're not sitting there going, I can consistently make money in the market, I can. I'm sitting here proving it. If you don't feel that way about your trading, you need to take a step back and evaluate. And what Rob told me, he goes, stop. Stop trading big, stop trading hundreds of dollars, thousands of dollars. He's like, make a small trade this week. A small trade. Make $1 in the market. Keep it by the end of the day. Keep that dollar by the end of the week. If you can't do that, you're just like 90% of the traders out there. If you can make $1 and keep it by the end of the week, you're beating 90% of the traders out there. You're in the top 10%. He's like, no, if you can do that 2 weeks in a row, you're even better. If you can do it 3 weeks in a row, you're even better. If you can do it a whole month, you're now among the top 1% of traders. If you can be profitable 4 weeks in a month, just with $1. He's like, if you can do that with $1, it's just a matter of scale. If you can be consistently profitable in the market, it's just a matter of scale. I hadn't really thought of it that way, but that's exactly what I'm proving right here. And I've done this on my own for a long time. I thought it would be good exercise to start showing it publicly. So I opened an account back at tax day last year, funded it with about $75,000. I've put more money in, I've taken money out. It's ebbed and flowed as far as how much money is in the account of actual deposits. And I started trading. And I wanted to be consistently profitable and show people how to manage a portfolio consistently profitable and what that means. This is what it means. If you don't have something that looks like this, consistently profitable, you need to reevaluate what you're doing with your trading. Seriously, this is how you treat it as a business. Small risks, calculated gains, consistent income. That's treating trading as a business. Jack, you have anything to add?
Yeah, I think what you're doing is amazing, but what this leaves out is the how. And most people, when they see a growth curve like that or a gain in an account, they think that you're buying stocks that go up, right? Or you're shorting stocks that go down. Most people think of a directional trade. If you can make $1 a day on a directional trade, you pick the right stock going up or down, then you're doing great. But that's not what's happening here, or with me either. Uh, the money I brought in this month was through option selling in January, and I think what you got going on here, this is not really directional trades. People, that looks like you're a great stock picker, and you are, but the way you're doing it is through selling premium.
Yeah, I mean, my bread and butter.
That's the easiest trade. That's the easiest way to make a buck. You could sell a cash secured put today and make 15, 20, 50, $100, whatever. But that's the easiest way to make a buck. Sell an option.
My bread and butter daily income trade, I call it the beer money trade, is this NASDAQ trade. NDXP, people get confused, but it's really just NDX. Like, forget the P. It's just NASDAQ. I'm just doing a put credit spread on NASDAQ late in the day, collecting some money. This was $650 in the account right there yesterday. This was $650 right there in the account day before yesterday.
I love credit spreads. Let's walk them through the basics of a credit spread, and then maybe we'll talk about this a tiny bit.
So this was, this is my consistent income daily right here, $650. It's
selling
not
one option and buying a less expensive option.
Now, I've worked up to the point where I'm doing 13 contracts. So this is not a small money trade at this point. But it started out just one contract. Make 40, $50. And the way this works, you got to find something. And I know, Jack, you like to do credit spreads on AVGO.
And Goog right now. Goog
And
is
Goog,
amazing. I did
Goog
one on
has,
Goog yesterday.
Goog has earnings today, and
Love it.
Jack played this for basically for earnings, right?
Well, I do it every week, and I've been using Goog because it's in the trend. But with the credit spread, you get to pick the strikes. So I can pick the strikes that are outside of what the market maker expected move is and still get a fat yield. But the basic principles and concepts are I like something that's in a trend like this, and then I want to sell a put below where the market is.
So he's got an uptrend going,
Mm-hmm.
for the last. And you like to look at it in the 6 month time frame. So we pull this
That's my
over
favorite.
so we can
Yep.
see 6 months.
That just makes, look at that. That just is as good as it gets, folks. So rather than buying the stock, which I also own the stock, but it's expensive, but I can make 11% or 12% without this thing even going up. So I sold the 315 put.
Let me draw these on here
I
for
better
us.
look at this here first. I do so much of this, I forget, and I do it with different prices. Yeah, I sold the 315 put and I bought the 312.50 put for Friday's expiration. It's a 3-day trade, but this is outside the expected market maker move. And I'm so far out of the money here. See, but
So
even if it does, yeah,
this is where Jack's trade is. It lives right down here. And this is where current price of Google is. Now we're going to talk about, I think it's important to start on the chart, at least for me, when talking about credit spreads,
yeah,
because you want to be at a point where, the thing about a credit spread, you're going to get income on the front end. And we'll talk about how this works here in just a minute. But you're going to get income on the front end, but you're going to have a much higher risk of loss if this goes against you than the income you bring in. Right, Jack?
that's correct. It's a high probability trade. The ROI looks terrible, but the probability is so high that that's why
The,
I do it all the time.
the probability is high if you do it correctly. There's a
Right,
lot of ways to
right,
do it incorrectly.
right. So my thing is find a stock that's already trending higher and stay below the range that it's unlikely to get to in 3 days. And I use technical my charts to find that level of support. But I like to do it during earnings because the options get all jacked up and people are afraid to trade a stock during earnings. But this strategy is good because, like I say, you can make a lot of money because the options are jacked up and you can stay way out of the money, even outside of the expected market maker move. Doesn't mean you're going to be right, but I'm stacking the odds in my favor.
Now let's start off with the expected market maker move. Let's start off with helping people know how to figure that out.
This is a great tool you need to know, folks.
Now, Google has earnings today, and the market makers have priced options for Friday, February 6th. Today's the 4th. Today's Wednesday. Tomorrow's the 5th, Thursday. And then the 6th is Friday. So these are Friday's options. There are no options for today. Part of the new 3-day-a-week options thing is when a stock has earnings, there will be no options that day. You can agree with it. You can disagree with it. You can let NASDAQ and the SEC know that you don't like that if that's, the way it is. That's the way they've decided. There's not going to be an option expiration on earnings day. So the next earnings expiration for Google is Friday. Now, we come in here and the orange line for this platform, if you wonder what this is Tasty Trade. I like it. It's a trader's platform. This is the option chain. If you've never seen this before, how would you get here? You would go into your platform. You would pull up Google, GOOG. You could use the GOOGL ticker also. That's the Series A shares. These are the Series C, Class C shares. Jack likes to trade GOOG.
And
And
I like Tasty Trade too, by the way.
you come in here at the money. Now, it can be which side of the orange line, it doesn't really matter. Either way, it's about the same price, right? We're going to sell the call and we're going to sell the put on both sides. You can see if we go on the bottom side of the orange line, 22.28. If we go on the top side, 22.30, within 2 cents, that's pretty much the same exact numbers. So you're just coming at the money and selling the call and selling the put. You don't have to place the order. You just create the order. You look at the mid price on the order, and that is the market maker's expected move. That doesn't mean that's the move that the stock is going to make. It means that the market makers, which Jack used to be one of, have priced in these options to account for a $22.30 move up or $22.30 move down
Perfect
Google.
explanation.
On
They've
Google.
priced in the options based on their, that's right. That's a great way to explain it.
They want to make money, and they expect Google to stay in between these two uprights.
And they don't want to get hurt. That's the other thing. There's a ton of risk inside that box of $22, swing either way. And unless they price that option super high, they take a risk of loss of shorting an option that they have to buy back at a higher price or taking on one long that goes down in value. So they got to move quick and they got to have this stuff priced high so they have their risk removed from that piece of the market in that range right there.
Now, if you've ever tried to play earnings and you've lost money because it didn't move far enough, this is why.
Yeah, far enough were the key two words.
Far enough, yeah. Price
didn't
move,
but not far enough.
Well, we saw Tesla barely move. Tesla pretty much held in place.
That's the new move, no move. That's the nothing burger, as Nate calls it, right?
Yeah.
Then it drifts after the earnings.
Yeah,
but let's stick with our play here.
So $22 down. That's kind of where, as of today, and it is down a little bit today. Jack, you did your play yesterday when it was up $8 more. But, generally it was going to be like a $23 move priced into the options. So when Jack picked his spot yesterday, it was a $23 move priced. Now, that's not just the earnings reaction that's priced in there. It's the move between now and the expiration. Right here. That's now between now and Friday afternoon at 4:30 when the options are locked in. That's the expected move between now and then that the market makers want to price in to the options to keep from losing their shirt. All right. This works all expirations. If you want to come down here, 1,045 days, and you want to see the expected move of Google between now and then.
Yeah, that's interesting. People say, what is the expected move? And you have to say when, right? When are you basing the expectation on? What? Because look at that move, right?
If you want to price in the move for the next 145 days on Google, the market makers are saying that we expect $163 up or down. Isn't that cool? That's a cool trick, I think.
It's a very cool trick, man. I'll tell you. I think that's one of the most valuable tips a trader can have because you don't have to fear earnings. You can just, use this to help you get a good guide on it. And I don't fear the earnings because that's when these options get really juicy if you're a seller. So that's what I did with Goog. I sold the 315 and bought the 312.50.
So Jack came in here for Friday, did this yesterday, rolled in here, 315, closer to the money, and he sold it. All right. So bringing in credit immediately. But if you're just doing that naked, that's $31,000 of risk.
Too much for your boy Jack. I got to offset that.
Little bit steep, right?
And I want a hedge. So what do I do if I want to cut the price down and give myself a hedge?
So what Jack did, he rolled in here with a 312.50 and bought it. It's kind of an insurance policy. And what if I'm just completely wrong, right? I mean, if you're completely wrong, the risk is the difference in the strikes minus the credit you take in.
That's the most you can lose. Difference in strikes minus your premium. Yep.
So $2.50 minus this 65 or 60, 60, 65 cents. It's bouncing around a lot right at the moment. And we look at this, and now that risk is $192.
Yes.
Tells you right there.
Instead of 31,000. So I've limited my risk and I've lowered my capital required to do the trade. Two big things from buying that lower strike price put are just that. I've limited my loss where could have taken a huge loss just buying a put. I limited the loss and I massively reduced my capital required to do the trade, which means I could do more trades, more
Now,
contracts, other trades.
yeah, I was gonna say now you've massively reduced the amount of credit you're getting by selling that too, down from $400 to a mere $60. So what could you do? You could ramp this up, and somewhere around 7 trades is going to get us roughly in the ballpark of the same amount of credit, $420 credit, similar to selling this $400
Right?
put. But instead of having $31,000 of risk, now we've got $1,300 of risk.
Yeah, for $420. So that's still a little light for me. I'd go a little heavier, right?
I was just trying to compare it 1 to 1.
No, yeah, you're right. Now, the other thing we got to say is that if this whole thing falls apart, Goog, I can buy back that 315 put. I'll take a loss doing that because it'll go up in value if Goog goes down. But if I stay long that 312.50 put and it goes through both strikes, I stand to make a fortune. Way more than I lost covering the 315 put, by the way. That's only happened, though. I've been doing this service since 2011. That's only happened maybe 3 times. And when it has happened, that could be the biggest trade you ever had. We had a situation where we were trying to pick up $500. The profit turned into $13,000 because staying long that long put really paid off. But that's
Now,
the premise for the trade right there.
now to be able to do that though, to be able to rescue that kind of trade, you're going to need, if price came down near you, you're going to need this kind of money to be able to buy those contracts back.
Each one, right? That's why I use a tripwire and tell people about that too, because if the stock comes down, your real break even is not the calculated break even. Your real break even is going to be at a strike price higher than 315. So you'd want to unwind this thing quicker before it hit that higher strike.
So you got to have some capital in your account to be able to rescue this trade. If you trade it max, if you've got a $2,000 account and you're doing this much risk right here, you're not going to be able to pull this out and make the money if this is busting down through you.
Nope. You're going to just unwind the trade. You're going
to be realizing a loss close to this max loss.
Right. Now, if you unwind it when Google, let's say, hits 318, if it were to come down there, you might not lose the whole 1345.
Yeah, you may be somewhat less, but it could be the whole 1345.
Yep, that's right. Yep. And that's it. And I do that all the time now. This trade is now I can do it 3 times a week instead of just once.
And what Jack's saying is now that we have 3 times a week expirations on Mag 7 stuff like Google, AVGO, Nvidia, Tesla, Apple, Amazon, Google, of course, Microsoft, even IBIT, Silver, SLV, and GLD have these 3 times a week. It gives you lots of opportunities to be able to sell credit spreads up to 3 times a week.
Yep. It's awesome. Did you mention IBIT? That has that.
Yeah, IBIT, I said that one. And I roll in on NASDAQ because it has every single day.
That's so cool. So you could just know you have something to do every day without guessing, is there going to be a good trade? You know you got it with that daily stuff. So this is a credit spread. This is not a calendar spread. This is just a simple, what we're talking about here, simple credit spread.
Yeah, just a simple credit spread. A calendar spread would be where you choose 2 different expirations when you're doing something like this.
Same strike.
And usually the same strike. Doesn't always have to be the same strike. You can, calendar spreads have a little bit of variable to it, variation. But this would just be a simple vanilla credit spread.
I love it. One of my favorite trades of all time.
Now, the one we just went through was a bullish put credit spread or a bull put credit spread, or there's a variety of different things people call them, but
bull put credit spreads, bullish, stocks bullish, credit spread using puts. Yeah, that's how I refer to it.
Now, why would we call it a bull put? Just to go through it for everybody to make sense, it needs the stock to remain higher than our strikes right here.
But I have a good cushion. It can go down quite a bit and I still don't get torched.
So even if it does come down, we still need price to remain above
350.
our sold strike to make our money.
Mm-hmm.
And that's what makes it bullish. And then we're using puts, the put side, as the operative instruments that we're using. So that makes it a put. It's a spread because there's two different options involved. So it's a bull put credit spread. We're getting a credit on entry. All right.
Getting paid up front.
Now, if you've heard somebody talk about a debit spread, that would be where you were buying one. And if you expected price to drop, you'd be buying one closer to the money and selling one further out to reduce your cost. And then your money would come from this dropping through, and that would be a bearish debit spread because you would be spending money up front.
Spending money up front. Now, which would you rather do, folks? Spend money up front or get paid up front?
I mean, you've got to be
Spend the money up front. That's a directional trade. No matter if it's a debit spread or straight up buying a stock, you need a direction to be made. Credit spread, you don't need it to go up. It can, that's fine. It can stay sideways. It can even go down however many percent you want. But I would rather get paid up front rather than to pay up front.
Now, the beauty of this trade that Jack went through right here, if Google does nothing on earnings, what happens, Jack?
I collect 100% of my net credit. Keep it. Options expire worthless.
If Google goes higher on earnings, what happens, Jack?
I keep 100% of my net credit. Options expire worthless.
If Google drops to 315.01 by expiration, what happens?
I keep 100% of my net credit and the options expire worthless.
So
I can win in three different outcomes.
That's three different outcomes. The only time he gets in trouble is if this thing just crushes down below the expected move.
And even then, I've got the cash to buy back the 315 put, and I'm going to ride that 312.50 like a cowboy all the way up. So that's how I play them. Now, the other thing, though, is I made 12.1% on this trade. You would make way more on a debit spread when that on a directional trade. If you paid to make a debit spread, you stand to make, 20, 50, 100% or more. You could make 300% on a debit spread. You can't make that on a credit spread. 12 is a juicy trade for 1 week.
This $60 is all you're ever going to make on
all
this
you're going to
spread.
make 12% roughly for a week versus you kind of know you're going to make that, whereas with a debit spread, you don't know if you're going to make it. But if it does work, you're going to make way more than 12%. But I like this boring stuff every week. I like that stuff. I don't want the risk of a debit spread.
Now, see, you're putting up this much money at risk to make this much money. What I think's funny is when people tell me that the risk isn't worth the reward on credit spreads. And I get told that a lot on my NASDAQ trade.
Yeah, I get told that here.
Now, if you come in and buy 100 shares, if you just buy one share, let's just say we buy one share, right? That's more risk right there. Well, Google's not going to go to zero. Anything can go to zero. All right, you have $339 of risk. It's taking $339 of your trading capital to buy this stock. What has to happen to bring in income? What has to happen for this to make $60? It has to go up $60 for you to make $60.
Mine doesn't have to do anything. That's the thing I love about it. No requirements for it to move.
If this stays flat, you make no money. If this goes down, you lose money. If this goes up, if this goes up $60, then you make $60. That's not the case right here. We just went through it. Like, this is why these are so, that's why I like them. Now, I don't play them all the time necessarily, and a lot of people have a bad taste because they followed charlatan gurus that get you in close to the money, not taking in consideration the risks. Somebody might tell you, oh, we should do I'm really bullish on Google. We should do this spread right here. You collect $1.20. And the real risk of loss right here is 50%.
Yeah. The problem I see constantly is number one, they're in a stock that's not trending higher. You're going to get your face handed to you if you do this on a stock trending lower. You can't do a bull put spread on a stock bearish, right? That's number one. They got the wrong stock. And number two, they got the wrong strikes.
Yeah. And, you know, strike pick is key to this. Jack, you admit you don't predict price,
No.
but you do use some technical analysis to figure out where price is
Yeah.
likely not going to go.
So lay a 23-day EMA on there and a 54.
And it's as simple as just add the EMA. Then we change one of them to a 23. Oop, get my fingers on the right buttons. And you see the other one, a 54? 54?
Yeah. Now I'm going to see where is it relative to the 23. If it's riding above that, then that 23 is going to serve as a point of support. So then what I want to do, I know that's really nice, right? Point of support, that's real great. Okay, now I want to use the 54, which is going to be, is the stock above the 23? Great, that's finding support. Now I want to go even deeper out of the money because I don't want to play around and take risk. So I'm going to try to start hunting for strikes at that 54 and try to make 10, 12% in 3 days and do it all over all the time. So that's the mechanics of it right there. And it just so happened to fit right in there perfectly this week.
Oh, there you go, everybody. That's
And I'll be doing it live for everybody that comes with us and watches this live in Jacksonville. I'll be doing it. But I got to tell you one thing is I'd have to have Scott Covert look this up, but we went almost a year without a loss with this strategy. And I've had it as high as a 97.2% win rate for a full year. And I've lost track of, I think we're at this week. If we win this week, knock on wood, this will be something like 40 something trades in a row, 44, 45 in a row. So, yeah, it's a high win rate. Doesn't have to be a disaster when you lose. If you do it right, you pick the right stock in a trend, you get deep out of the money. Use whatever technical analysis you want. You could use the 20 and the 50, Michael. I get more precision with the 23 and the 54, but that's it. That's my bread and butter baby right there. In addition to naked puts, cash secured puts, and covered calls, this is my income baby right here.
and one of the things he's doing is using an EMA, whereas usually when you hear people talk about the 2050 or 200, they're talking about SMA. All right. Now, the difference between these, an SMA is a simple moving average. It takes the 20 candles, 50 candles, and 200 candles and places equal weight across all of those. That's a simple moving average. You just take whatever the last 20 were, add them together, divide by 20. That's the average. Same for 50, same for 200. Now, the market, a lot of pundits, a lot of people in the market use those. But the traders I've hung around tend to hone in on some special ones that they find near and dear to their heart.
It's
Now,
fine.
EMAs are exponential moving averages. They place more emphasis on more recent price action. So for that 23, the current candles have more weight in the average than the ones that happened 23 candles ago.
Look
But
at that thing, though, man. That for me, that has been money. That 23. Look at that.
This thing's just riding that 23
I'm
right up
telling
through
you,
there.
man. It only took me 30 years to figure that out. So
So why the 23 and not the 20? Simple. You're just hearing an expert pro who's made thousands of dollars, tens of thousands, hundreds of thousands of dollars in the market tell you that it took him 30 years to figure out he trusted the 23 more than the 20.
and the 54 and the 208. Now,
And the
if you
50,
want to know something that's money in the bank, if you find a stock where you see that stock crosses where that EMA 23, it was below the 54 and it crosses above the 54, that's it's on like Donkey Kong, brother.
go back here and
That's one of
find
the
it.
biggest. There it is right there. Whenever you see that, whew, I've been trying to find a scanner that will do this for me. But man, that is holy mackerel. Same thing when the 54 crosses above the 208. Any of those crossovers to the upside with these 23, 54, and 208, it's money. Downside too. When they cross over to the downside, you can forget about it. It's going down. Yeah, right there. See, look at that. This thing is just. But like I say, we brought out Trend Point software in the year 2000, and I started in 84. So it only, but again, I'm the Homer Simpson of the market. This thing I don't learn. I only learn things the hard way. I never learn anything the easy way. So this is just what works for me. And
So
I can look
Jack's,
at any stock in those three lines, and I could tell you what I think.
so that's Jack's 23, 54, 208 EMAs.
Mm-hmm.
Now, I'm even a little bit simpler here. I just have this orange line that I look at.
And what's that comprised?
This is made up of, it's actually really simple. I don't even show you the numbers in here, but it's I pull up the code, and if it'll pull up the code,
Oh
222, here
man,
it
you're
goes.
getting code. You're way over my head now with code.
But
Can't you just
I'll
give
just
me
show you the numbers in a second. Like, I just want to
man?
show the numbers. So
Oh, you lose me at the word code.
uh, the the code here for the orange is the 144 EMA and the 169 EMA. Those two EMAs combined, and I make a cloud out of them with the orange right there.
Okay.
And that's all I'm doing to make it. And that's the magic right there.
Yeah, I knew another guy that used the 144. He swore by it.
That's uh, that's the one I use right there. I mean, that's it. That's the 141. So what it is, 12 squared is 144, 13 squared is 169. And that makes this orange line that, kind of hangs together. So that's why the two EMAs. Now, funny enough, when you combine it with Elliott wave, wave twos and wave fours tend to bounce off of this line. And that's why I combine it with my Elliott wave stuff. So I'm always
I
looking for
like it.
bounces off of that line to trade.
That thing's been powerful. You've demonstrated that since we started in July, I think.
And AMD today, I mentioned yesterday we were probably coming back to that daily roadmap line
Yeah, you called it.
on
Now,
earnings.
see, no. I was looking at this morning. I want to ask you because I'm going to do this. But you see that gap down there in the M, right in the middle of the M?
Oh yeah,
Okay.
yeah.
So
That's
if it comes back down there, it's 173 is my. I got an alert to myself. I'm going to buy it back.
yeah. I think that the only requirement I have is that it goes lower than this low right here.
So you think it's bouncing off your roadmap line? Does
I
it
I,
find support there?
I want to see it just a little bit lower. I need it to dip lower than this low for me to get on it right there. Now it could make a nice big fat dip tomorrow. Touch this area, fill that gap, and it'd be on like Donkey Kong right there. I have a big upside target on this,
An AMD?
and I've been waiting,
Me too.
waiting, waiting for the
Me
entry.
too. Me too. I've only traded it one time in my life, and I am really waiting to get back into this thing.
Let me pull this up on here and show everybody. I had to jump to a different profile because I have my target saved on this other profile in TradingView. Here's my target up here. I've got to
Dang.
really zoom out. But this is the target area. It's a big fat one, 400 to 700.
And that's not based on any fundamentals or any story behind the company, just pure tech.
Yeah, this is not based on earnings, not based on news, not based on software, not based on anything but this pullback right here. This
Cool.
move up, this potential little pullback would get me my entry. It hadn't given a pullback. It hadn't given a classic pullback all the way up here. If this pulls back right in here, that's my signal. I was looking for something in here, never gave it to me.
Do you
Instead of
think it
chasing
could
it,
fill in? Could it fill in this whole gap? I think it can.
no, yeah, it definitely can down to 173.
Yeah, that's my. I'm buying it right there.
For a long time, I was looking for a pullback to a 618, but we're just not doing it. So it's more bullish. So if we get a pullback that sets me up right here, I may have to buy some shares or may have to buy some leaps and do some long-term calls or, synthetic stock. I'll have to figure out the play
Mm-hmm.
that's right for me and my accounts. There's lots of ways to play. I'll figure out something. I'll probably talk about it on here if and when I do it. And but if I can't find enough money, I may just sit on my hands. Like it could pass me by, and I'm not going to FOMO in later. So I've missed plenty of stuff. I can bring up thousands of charts and show you all the things I missed. I mean, I could have played that to the downside, but I didn't because I'm not. The market tends to go higher, and I tend to. And 90% of the stuff, roughly, this just a number I've heard over the years is that 90% of the stuff tends to go with the stock market any given day. If the general broad indexes are going up, 90% of the stuff is going up. The broad indexes are going down, 90% of stuff is going down.
And you got to be patient. You can't chase. I'll tell
So
you,
with
like,
so with the market in an uptrend, which S&P's been in an uptrend for years, even though today it may be down, that's an uptrend. So with the S&P in an uptrend, I tend to not short. That'd be going against the market.
yeah, right.
That's how you set yourself up for losses. Go against the
Market-driven
market.
strategy. No shorting when the S&P is above all three trend points, or if the S&P is bullish. You only go long. Market-driven. Never go against that grain, and don't go long when the market's all bearish. You get killed doing that. Stay with the market trend.
You got to go with the market trend. That's kind of I figured that out a long time ago. Don't fight the market. So I tend to not short when the S&P is going higher, and not go long when the S&P is going lower.
Right. So on that, I don't do any bear call spreads when the market's going higher. I only do bull put spreads when the market's bullish. I'll only do bear call spreads when the broad market's trending lower. Yeah, don't fight the tape. Simple.
And that's these. Hopefully, you're learning some valuable lessons here today, everybody. These are some key things in the market that Jack and I have learned over the years, and hopefully this is beneficial. Let us know in the chat if you're not having help, or if you're not finding help or benefit today, or if you are, let us know too. So, um, I've been at this a long time. I started when I was in the third grade, trying to crack this nut that is the stock market, and it took me a good long while before I made $1 million.
Yeah. We're talking at the beginning of the show about, being good, or, you're right for a month or so, but you don't know why you're good. And that happened to me. I took all my trade confirms down. I put 25 grand in an account at Schwab. I did a public trading challenge like you did. And I put that in there, and I just shared every trade with the public. This was in 1999. And at the end of the year, I was up pretty good, but I wanted to know why was I up so much. So I spread out all the trade confirms. I used to mail you the confirmation, and I'd match them all up, and I'd say, what do my better trades have in common? I want to understand, what am I doing that's right? Is it a fluke? What is it? It turned out that I was simply buy high, sell higher. But the deeper story was I was doing that within the context of a stock that was already in an uptrend. Specifically, it had hit a 52-week high. It was over $25 a share, traded average million shares a day, had the ability to move $2 to $10 in 2 to 10 days, and all that stuff. And after hundreds and hundreds of trades, I took them all down to a CPA, and I had the account. He gave me a compilation report, and I really analyzed what I was doing, and found what to cut out. Stocks under 20 weren't working for me, and yeah, made everything different. And then I developed the software based on these EMAs that you see here. But yeah, I had to tear it all apart from inside. What was I doing right? What was I doing wrong? Funny enough, buy high, sell higher. That was what it was.
It was funny is, buy low and sell high is the way you make money in the market, regardless of which way you do it. Credit spreads are kind of selling high and never buying if you do them right. It's kind of the beauty. One of the things that was like a revelation I had is the beauty of credit spreads or even selling puts, credit trades. You're selling high and hoping that you never have to buy it. That's, buy low if you can buy it for nothing and sell high. That's You've just done the perfect trade in the market. And
That was easier for me too. When I was it Dean Witter? They brought in this guy about picking stocks, and the truth is, this dude he never picked anything except his nose, and he's up there laying all this relative strength lingo on us and stuff like that, and it was all about stockbrokers calling you up with a stock that was going to make you money by going up in price. That was the whole emphasis. And I wasn't just couldn't do it. It was harder for me to try to pick a bottom. I don't think anybody can pick tops and bottoms except you, but most people can't do it. And it was just easier for me to pick a high, buy high and sell higher. And once I started doing that, it was just easier for Homer Simpson over here and way more profitable than taking pot shots on trying to catch a falling knife. But I didn't have the technical expertise you had, but I could see a trend, jump on that. And one of the biggest ones, how many people here remember JDS Uniphase? Remember the old Uniphase and then
yeah.
turned into JDS Uniphase? That was a revelation trade right there. Everybody and their brother told me not to buy it, and I went all in, and it
Yeah.
worked. But that was a million years ago. JDSU, yeah.
And people that have this is a free place to get 52-week highs. Jack has his trend point software that hones this in even tighter. But if you're just starting out, you don't have a lot of cash, you don't have much to throw it. New software, new indicators, new this, new that. I'm a big proponent of getting started for low cost
Or free. Yeah.
or free. This is a free
Free.
place, Market Chameleon right here. I don't even have an account. I can't click the login and button and do anything. But if you come to stocks, their stocks tab right here, come down to 52-week highs and lows, click that button, brings you to a button that has a tab that has 679 new 52-week highs today, 482 new 52-week lows today.
Right there, that'll tell you the state of the market. That's a little cheat guide I tell people. When right there, you could see market's strong.
It's
Market
strong, but
breadth is pretty big.
it's also kind of balanced between the highs and lows.
Right now it is. Yeah. That's a
There's only
lot.
a slight bias to the high side, but we're kind of balanced in here. So it's a little bit mixed reaction, and that's why we've been shopping in the market. It's stuff is making lows and stuff is making highs. We're only slightly biased long. Now, a place how to refine your list even tighter. It's like, okay, I've got 679. That's a lot, right? That's a lot. That's a lot for me. That's a lot. I'm sure it's a lot for you.
Too many.
Way too many. But if we come over here, this last column, average daily option volume. If we just click this a couple times and sort it, now all of a sudden we have ones that have thousands of contracts of volume every day.
Action.
This is where you want to play if you're playing options, credit spreads. If you're
Yep.
playing, now I like to stay in here with stuff over 10,000 a day. And looks like the first page is pretty much almost all of them. Sometimes you can get into page 2. That's 25. Now we're down to 25 to look at.
Wow,
Some of
you really
these,
whittled it down. Look at that. Just doing that right there knocked all the junk out.
yeah, I
Now
knocked 650 stocks out of the list. Now I'm down to 25 that are actually interesting. Some of these may not fit the price profile, like $5.
That's right. Next thing is you want to look for price. Yeah.
I can't really trade stuff over 100. So I'm going to knock out things over 100 and then whittle my list down even tighter.
Now you only need 3 to 5 stocks, right? So you don't need a big list.
Yeah. So this quickly gets you down to a list of stuff that you can potentially trade.
All looking good on there, man.
Yeah, so lots of good stuff because it's all
Really
making
good things.
all
Wow.
making 52-week
Look at
highs.
that. Cisco looking good. Exxon, I've been waiting for that to come down forever. Uh,
Yeah,
Exxon, that got away from me.
Coca-Cola's in there.
Yep, I got some puts on Coke right now. Puts on Johnson Johnson.
Walmart became the first
Yeah.
became a trillion-dollar company.
Boy, Caterpillar, is that today? Caterpillar, was it like, is it below 700? That's shocking. It was like 711.
It took let's see, let's pull up the chart. Caterpillar and take a look at it.
Kitty cat, I was long this thing. What's going on with you, cat?
Yeah, it's getting
It
a
was
little
a,
pullback today.
it was hot. It was up 17 or 25 today.
Yeah, it was up to 723 and now it's
That
back
thing.
down.
Yeah,
Pop and
who would
drop,
have thought
baby.
volatility in cat? Oh man,
Oh, look at that last pullback though. It could do that right there again. Come back down to
nice
644.
trade. Nice. That would still be a drop within the context of an uptrend.
Yeah, and that's beautiful right there. Now, Jack uses that 23 and 54, and you probably stay mostly on a daily chart, right?
Mm-hmm.
With that.
Yep. Daily.
Now, for me, sometimes I'll dive down in the smaller time frames, and this line acts as support and resistance on all time frames. So that's one of the beauties of the roadmap line that I use. This 144, 169 EMA thing is that it works in all time frames, and we can dive all the way down to the 1 minute time frame, and it still works.
I'll tell you, even as a guy that's day traded his head off, the 1 minute, 5 minute, 15 minute, none of those have ever worked for me.
Well, it hasn't worked for you, but I have a system that takes advantage of these bounces on the 1 minute time frame,
Really?
and it works quite a bit of the time. In fact, if we turn it on and look at this and grab, this will take a minute to get the entire history. Let me pull up how often this does actually work with bounces off of this roadmap line. We're just on Google. Look at this, 1,600 trades. 82% of the time it works out. Right there. 82% of the time. These bounces play out to the target. And I have a system that picks these up, picks out an option for you to play to take advantage of that.
Oh, what's it called?
It's called Triple Debt Trader.
I love it. It's
And
automated, huh?
it's completely automated. It's sitting here picking out trades right now while I'm sitting here talking to you.
And it spoon
And
feeds the guy that has it.
spoon feeds you, tells you when the pattern fires off, which option to play to take advantage of the pop, what the target is, what the stop is.
Dang. How
Gives
many
you
plays you get a week usually?
so it's quite a bit. Up to 13 a day.
Oh,